they are showing a very tepid growth, or so it seems. The I think the dollar revenues itself had grown to 3.19 from 3.09, if I'm not mistaken. Revenue up at least, this is more guidance. Guidance looks strong. Revenue up at least 21% at 12.4 billion. And the fourth quarter revenue is seen at least 3.23 billion. That compares to, I think, 3.19 billion for the current just ended quarter. And remember, the next quarter usually is a quarter laden with furloughs. So that looks like a strong guidance that's coming from Cognizant. But that's the revenue picture, 3.19 billion compared to 3.09 billion. Not all that strong if you looked at those numbers. Let's go straight away to the person who looks at these numbers more closely. Reema Tendulkar is waiting by. Reema, that's all we have in terms of dollar revenue growth to 3.19 billion and a guidance of 3.23 for Q4.
Well, yes, Lata, these are looking like a very good set of earnings. It's a beat on the top line. The companies deliver $3.19 billion, so that's roughly a growth of about 2.9%. This is higher than Nomura estimates of 2.7%. This is higher than the company's own guidance of 1.8%. The street anyway believed that the company's guidance was a bit conservative. So instead of the Q3 guidance of 1.8% put out by the company, Nomura estimate was higher at 2.7%, but the company's gone ahead and beat that, which is why there is a third consecutive revision in its 2015 guidance. So right now they're anticipating full year growth to come in at 21%. And here's how the guidance has increased over the last many quarters. It started off at 19%, then it was further raised to 19.3%, then increased to 20.1%, and now it's increased to 21%. So Q3 is a beat compared to street expectations as well as the company's own guidance, and that's driving another 2015 dollar revenue guidance increase for the third consecutive quarter. For the coming quarter, Q4, you mentioned a figure of $3.23 billion, so that would roughly be a growth of 1.25%. Yes, it pales in comparison to the growth rate that it's seen, but we generally know the coming quarter is a bit, it's generally a seasonally weaker quarter. And in the prior quarter, in the conference call, they'd indicated that we expect slower growth in the second half of the year, which covers for additional downside risk disruptions due to potential M&A activity, and there could also be some volatility in spending in the healthcare sector. So we'd expected H2 to be weaker than H1, so that's played out. But that said, 21% growth for the full year is far superior than what the peers are likely to report. Remember, the NASSCOM guidance stands at 12 to 14%. TCS at best will be within, not at best, TCS will be within the company's guided band. For something like Infosys, though it's on a recovering track, growth is going to be towards the lower end of the NASSCOM guidance. So Cognizant continues to remain right on top of the pack, and this is looking like a good set of earnings.
How does it normally affect the listed stocks, Reema? Would it mean that the allocations that come to the Indian IT space get diverted to Cognizant, or because of the strong Cognizant performance, there is a positive rub-off on IT stocks?
There's generally a positive rub-off on IT stocks, so it's just a sentiment positive, so don't expect a runaway rally. But if in the commentary you hear that discretionary spending is picking up, America is doing well, BFSI is doing well, particularly I guess the management will be talking a lot about digital, so that just reinforces confidence about the demand environment for IT companies. So typically when Cognizant does well, you see companies like Infosys and TCS have a sentiment rub-off impact, but again, it's just sentiment.
All right, Reema.